joined us on Market Cafe right here on ET Now. I'm Ashesha and with me is Kanishka Sarkar joining us from our Delhi studio. And this is a show where we take you through all the cues that we are getting from the global markets, which are the stocks that you need to keep an eye out on, either based on news or brokerage reports, and all other stories that will prep you for today's trading session. But Kanishka, let's get started with global market update then. And US markets ended positively yesterday, isn't it?
That's right, Ashesha. Very good morning. It was a rather positive session on the Wall Street as investors continued filing into risk assets that sent S&P 500 and tech-heavy Nasdaq Composite to closing records. In the broad market S&P, that gained about 0.3%, whereas the tech-focused Nasdaq that finished largely flat but higher by 0.09%. And the Dow Jones that advanced over 190 points or 0.4% at close. Now remember, these moves come as investors shrugged off any worries around the latest trade developments that we have been witnessing. These include a 50% US tariff on imported copper that US President Donald Trump announced Wednesday night, as well as 50% tariff on Brazil that has been announced. Now, this rally began on Wednesday after Nvidia briefly touched that $4 trillion market cap for the first time, launching a rally in tech names. Yesterday, consumer discretionary was the top performing sector in the market. Now, all three major averages, they are on pace to end the week little changed, with the Dow hovering just under the flat line on a weekly basis, whereas the S&P 500 and Nasdaq, they are higher by less than 1%. Now, in terms of what we are tracking today, first of all, Trump has announced a 35% tariff on Canadian imports starting August 1st, citing Ottawa retaliating with tariffs against Washington. Now, let's see how the market reacts to that today. And secondly, investors are also looking ahead to the Treasury Department's monthly Treasury statement due later in the day. So that's how the global market, the US market setup is looking like. But Ashesha, how are things on the crude front? Key commentary coming in overnight?
A commentary and several news pieces that have come in for Brent crude this morning. One, of course, remember yesterday Brent crude ended with a cut of over 2% in yesterday's trading session, although today morning it has begun on a positive note. It is up about 0.3%, trading near that $68-69 per barrel mark. OPEC Plus came out with their commentary for the next few years, where they say that Chinese growth is likely to slow over the next few years. Demand from China for oil is expected to slow, and hence perhaps we could see demand concerns in the near future. But on the flip side, they said that demand over the long term will continue to remain very solid, and they are not seeing any peak in sight as far as oil demand is concerned. So on the back of this commentary that came in from OPEC Plus, where they said that perhaps output and demand in the short term is likely to be lower, we saw that decline that came in on the oil market yesterday. But apart from that, we also had agencies report citing delegates that OPEC Plus could pause production hike that they have announced. Remember, it has already been announced for the month of July and August. There are sources and there are reports which suggest that output hike could be done for the month of September as well. But after September, OPEC Plus will go ahead and pause the output hike that they have planned. Now, remember, this is a part of a larger scheme of things. 2.2 million barrels per day output hike is what they had planned by September 2026. They've preponed it by 1 year. It is likely to be completed this year as well. And after that, we will not see any output hike going forward. In fact, Goldman Sachs also believes that after the 2.2 million barrel per day output unwinding that we will see this year, they are not expecting any output hike. There are also fears of a supply glut, so that is likely to be a key factor going forward. But apart from oil, let's also put the spotlight on the yellow metal then. Although we have not seen much action over here over the last few days, today gold has gained nearly 0.1% as we speak, trading near that $3,330 per ounce mark. Several news pieces and several factors at play here. One is the tariff uncertainty that could determine demand for safe haven buying going forward, and the second is outlook for US monetary policy and the way interest rate environment is likely to shape up going forward. So those are some of the key factors which will determine the move for the yellow metal and oil market going forward. Kanishka.
Right, so that's how the commodity market setup is looking like, but let's also shed some light on how the markets, Indian markets performed yesterday. Now, the Lal Street once again witnessed a muted trade. Nifty failed to stay above that 25,400 mark. Meanwhile, broader indices, they also underperformed. Let's get Ravinder to get us all the details of the market action yesterday.
Indian market closed in red in yesterday's trading session on back of the Nifty weekly expiry, and Nifty 50 index declined for the second consecutive session, closed below 25,500 mark, and Apollo Hospital, Bharti Airtel and HDFC Life Insurance was the top losers of the Nifty 50 index. If we talk about broader indices, then Nifty mid cap and small cap, both the indices closes in red in yesterday's trading session. Nifty mid cap declined for the fifth consecutive session, mainly driven by Bharat Dynamic and BSE, and Bharat Dynamic stocks stumbled in yesterday's trading session on back of the Motilal Oswal initiative with neutral rating. Nifty small cap 2 close in red. If we talk about sectoral indices, then Nifty Realty and Nifty Metal was the only major sectoral indices that closes in green. Nifty Realty was the top sectoral gainers in yesterday's trading session. And on the flip side, Nifty PSU Bank was the top sectoral losers in yesterday's trading session, declined for the fourth consecutive session, mainly dragged by Canara Bank and Bank of India. And Nifty IT Index 2 declined for the second consecutive session, mainly dragged by Coforge and Oracle Financial Services. And all the constituents of the Nifty IT Index were closing red. Nifty Bank declined for the second consecutive session, mainly dragged by Canara Bank and Federal Bank. And Nifty Pharma, Nifty FMCG and Nifty Auto 2 close in red. And lastly, Nifty Energy 2 declined for the second consecutive session.
Nifty ended with a cut of nearly 0.5% in yesterday's trading session. But to understand what the macro setup is looking like, especially because of the developments that we are seeing on the tariff war front, we are now joined by Mr. Hugh Johnson, Chairman and Chief Economist at Hugh Johnson Economics, now joining us. Sir, thank you so much for taking your time out and joining us here on ET Now. Every day we have some or the other announcement. Today again, Donald Trump has announced, or rather proposed 35% tariffs on Canada. Given the macro challenges that you're facing and the outlook for interest rate environment for the next few months, how do you view the macroeconomic landscape and what impact will this have on the American market?
Well, you can obviously see that it's extraordinarily volatile. Volatile and unpredictable. I mean, it's one thing that's a characteristic of what we're seeing today is the same thing that we saw in 2018 and 2019 during the first Trump administration or the first Trump trade war. And that's an on again, off again sort of phenomena where you have tariffs that are levied one day and the next day they're reversed in response to a decline in the market. So we're seeing pretty much the same thing, which means I'd really come down to the bottom line, which is this is going to be an extremely volatile, and I like to call it, let's call it a volatile and trendless market. There'll be good days and there'll be bad days, but I don't think that you can say this is the start of a new bull market. And I don't think at the same time that this is the start or we're in line for a bear market. Trendless and volatile is probably what you're going to see for the next month or two in response to an extremely volatile public policy from the U.S. or from the Trump administration.
Okay. Hi, Mr. Johnson. This is Kanishka also joining in. I wanted to ask you about the tariffs that have been proposed for Brazil and also on copper imports, that 50% tariff that has been announced by Trump. So how do you expect that to, affect global supply chains, especially in manufacturing and commodities segments?
You've got, this is starting to shape up or to sort of mirror what happened in 2018 and 19. And what you're about to see, of course, we're starting next week, when we start to get in U.S. inflation numbers for the month of June, you'll start to see some real these the impact of tariffs, the increase in prices start to creep into the dialogue, creep into the numbers. You'll see that in, for example, the consumer price index, which will be released next week, should show a 0.3% increase. 0.3 doesn't mean much, but the year-over-year number is probably going to be a little bit unsettling and will again indicate some of the impact on tariffs. The second thing that we're starting to see an ongoing, but we're starting to see the decline or the contraction in U.S. consumption. Consumer spending is not very, very good. And when we look at the second quarter, although tell you the number for the second quarter looks like it'll be okay, like 1.8%. When you compare it to the first quarter, which was only 0.5%, it's still the case that consumer spending is slowing. So what I'm really saying very, very succinctly is that we're starting to see, or we're going to see, numbers over the next couple of weeks, which will show you the impact of tariffs, and they're not going to be pretty numbers.
So that's as far as the macro setup is concerned. But if you track the oil market very, very closely, we have several developments that have come in over there as well. OPEC Plus is expecting demand from China to slow down, and China being the biggest importer of Brent crude, that is likely to weigh heavy on Brent crude prices over the next few months. How do you view this setup, especially in the landscape of tariffs, and what kind of impact will that have on the oil market?
Well, the oil markets, if you talk about something that's unpredictable, the oil market is probably as unpredictable as anything. I think we're in a period, and when I say a period, I think 2 to 5 years where we're going to have declining oil prices. Not significantly so, but that will be a reflection, I think, of economic conditions throughout the world, which are really going to be, quite frankly, we're going to see the shift from, quite frankly, from oil to other non-oil commodities will be the primary drivers. There'll be a lot of volatility around the numbers. So I'm talking about a $70 to $75, maybe a little bit less, equilibrium price of oil with a lot of volatility around that number. And of course, for the time being, when we're starting to see a slowdown, not only from China, but a slowdown in the U.S. The U.S. economic growth is likely to become somewhere around the 1.3 or 1.4% number for 2025. That's down from a 2.8% number in 2024. So the U.S. is slowing. That'll slow in the second quarter. It'll slow in the third quarter. China will slow. The European Union will slow. Everything is more or less in the process of slowing, and quite frankly, that'll show up in the price of oil, but it'll also show up in just general conditions. Again, I go back to the first thing I said, which was a trendless and volatile market environment. And I think that's really what you prefer. It's going to be very hard to make money, and especially because our valuation right now in the U.S. markets is a little bit high. We're about 3.5% overvalued, or over the level I think we'll reach in the fourth quarter of 2025. It's going to be very, very hard. In this kind of an economic environment and earnings environment, it's going to be very hard to make money in the equity markets. Be patient, though. Every investor should understand that, as was the case with all of these very difficult periods, at least in my lifetime, all these difficult periods are followed by better periods or an emergence. And with some patience, in time, you'll be just fine. You'll make money in the equity markets, but you've got to be patient. You can't jump the gun. And if you go in now, you'll be jumping the gun, and it's going to make it more difficult for you.
Okay. All right. Okay, so that's the view coming from Mr. Johnson. Be patient in this kind of a volatile market. Thank you so much, Mr. Johnson, for joining us this morning. Great chatting with you, and thanks for helping us understand the global market setup. With that, we'll let you go.
Happy
all right,
to be
then
with you.
Moving on, let's get Pulkit, who's joining us to give us a roundup of all the of what the F&O market snapshot is looking like.
Good morning, Kanishka. So if we talk about the F&O positions for India VIX, the current value is around 11.67, and earlier it was around 11.94. For put call ratio changes, the Nifty PCR is around 0.69, and for Bank Nifty it is around 0.86. If we talk about change in open interest for index futures, so it is very minute, that is 0.07%, and the activity is short build-up. If we talk about most active strike prices for both call and put, so for call it is 25,500 and put it is 25,400. For highest open interest in any strike price for call and put, for put it is around 24,000 and for call it is 26,500. But if we talk about the nearby strike price for call, it is 25,500 as well. For Bank Nifty, the change in open interest for index future is around 3.51%, and the activity is long unwinding. For highest option open interest in any strike price for both put and call, it is 56,000. If we talk about the long positions for FII, the long position is at around 24.6%. For DII, it is around 63.25%, and for retail it is around 59.4%. So these are the positions about FNO. And if we talk about the securities that are in ban for FNO, so there are two companies. First one is RBL Bank and second one is Hindustan Copper.
That's how the FNO setup is looking like. Pulkit, thanks so much for joining us with all those details. But let's shift focus to all the stocks that will be in focus this morning. Abhishek, Sharad and Varun are now joining us from our research desk. But the big stock in focus today will of course be TCS. It reported its numbers yesterday in the evening. Abhishek, apart from TCS, Glenmark Pharma, the stock was up 5% yesterday. What is the news over here?
TCS has reported its Q1 FY26 result. Broadly, the result was muted against the street's expectations. Post-result, the management has also highlighted the impact of geopolitical issues on the demand scenario. The key highlight here is that the management has also raised alarms over the demand scenario in the BFSI segment. It's unlikely that there is any kind of earning upgradation post the result. Further, the ask rate for the coming quarters will also increase, even if we expect a flat kind of growth in FY26. So, considering that stock is expected to remain range bound, and the rub-off impact of this also be visible on other IT companies, especially the Tier 1 companies. Other than that, the Glenmark, there is a news flow in the Glenmark Pharma. One of its subsidiary has entered into a licensing agreement with AbbVie for next generation cancer drug. And under the pact, the company will get an upfront payment of $700 million, and over the period it will be eligible to receive $1.22 billion kind of a payment. Directionally positive for Glenmark Pharma.
All right, so TCS and Glenmark Pharma, those are the two key companies that we'll be tracking today in today's trade. But Sharad, now coming to you, you've picked out HUL, Z, SBI, oil and gas counters for us. So what's the news flow on these one?
HUL is in focus as there is an important change of management announced by the company, and HUL has announced Priya Nair as the MD and CEO of the company. Now, outgoing person would be Rohit Java, and Priya Nair, she is currently the president of beauty and well-being for Unilever. She had joined HUL in 1995, so an important management coming in for HUL. For Z, there is a negative news flow. Investors have rejected proposal to issue warrants to the key shareholder entities which belong to the promoter segment. Roughly 40.49% public investors voted against the warrant issue to the key shareholder entities. They were expected to actually increase their stake in the company, the promoters, from 4% to 18%, but that fundraise plan has now been blocked. SBI, positive news flow for them. Board meeting on 16 July to consider their fundraising, and we have been hearing about the QIP number which would come in to roughly around 20,000 odd crore rupees. Also, OMCs would be in focus, a positive reaction coming in for them as oil prices, they have fallen near the $67-68 mark due to the trade war fears and a decreased demand as well. And this would be of course positive for aviation, paint and specialty chemical companies, but negative for ONGC and Oil India. OPEC also came out with its commentary, and they had stated that they would be thinking about halting production at least till October. Hardeep Singh also stated that the oil minister that on buying Russian oil, India has never ever bought any sanctioned cargoes coming in, but OPEC did say that the demand for oil overall in the coming years, for the next 4 years, might be on the lower side, but the long-term target still remains the same.
So several oil-related stocks in focus on the back of that news piece. But Varun, coming to you then, IREDA reported its numbers and some commentary that came in from Chairman Anil Agarwal as well on Vedanta. Tell us more.
Definitely. So the stock Vedanta has been in focus since last few days, and during its AGM, the management has said that it is in advanced stages of restructuring its business, and also the company has said that the report by Viceroy was actually motivated and the company will take appropriate measures. For IREDA, the company has reported its Q1 numbers. On the face of it, it looks better because the overall NII number has gone up by around 36%, but if you look at the profit number, number that are down by around 36%, and the main highlight is the gross NPA number that has gone up from 2.45% to 4.13%. There are several clients, and also Gensol portfolio has been declared as NPA, and that's the reason you are seeing such a spike in gross NPAs number, and also net NPAs number, which have gone up from 1.35% to 2.06%. Although the net interest margin has also risen on a quarter-on-quarter basis from 3.29% to 3.6%. Now let me tell you about Birla Corp, because the company has been declared as a preferred bidder by Government of Rajasthan for Tadas Limestone Block 2, that is in Nagaur district. So this is a good news for Birla Corp. So keep an eye on Birla Corp as well, and also keep an eye on JSW Infra, because the company's resolution plan submitted for NCR Rail Infra has been approved by the Committee of Creditor, and also the company has received letter of intent for this resolution plan.
All right. Thank you so much, Varun, for getting us that list. In fact, thank you so much, Abhishek, Sharad and Varun, for taking us through all the stocks that are going to be in focus today. With that, we'll let you go. All right, then let's shift focus to all the cues that we will be watching out for today. Looks like a very data-heavy day, Snehi.
Well, yes, lots of cues to watch out for. Back home, all eyes are going to be on the forex data that we will be receiving, so watch out for that. Globally, from the US, federal budget balance will be an important metric to track. And from UK, you have industrial production numbers coming out there, IIP data, along with the trade balance, so watch out for both of these indicators from UK as well. Shifting focus back home, while no Nifty companies will be coming out with their earnings, Avenue Supermart, or D-Mart as we know it popularly, will be coming out with its Q1 FY26 earnings, so that stock will be in focus. And apart from that, in terms of corporate action and board meetings, stocks like Canfin Homes, IDFC First Bank, Mahindra Logistics, Shriram Finance, Sobha, UPL and lots of others are going to be trading ex-dividend tomorrow, so watch out for all of these stocks as well. So let's keep a close eye on all of these cues to watch out for. Several events to keep an eye out on in today's trading session. Snehi, thanks so much for joining us. But let's shift our focus to how the Asian markets have opened this morning, and GIFT Nifty is indicating a negative start for the Indian markets, down more than 0.5%. But Nikkei on the flip side is absolutely flat. In fact, as we speak, 39,655 is where it is currently trading. Kospi is up 0.3%. Hang Seng Index, that one is also started on a positive note. In fact, it's up nearly 1%, 240 points higher for the Hang Seng Index at 24,266. Shanghai is also up 0.2%, 3516 is where the Shanghai Index is trading. And ASX 200 though has started on a slightly negative note, down nearly 0.1%, 8578. But Nifty implied open, as I mentioned, is indicating a negative start. It's down 140 points. Remember, yesterday Nifty ended nearly 0.5% lower, and today also GIFT Nifty is indicating a slightly negative start for the Indian markets. Kanishka.
All right, so that's how the market setup is looking like for the Indian market. But let's slip into a very short break. But before that, let me tell you all the key commentary that we'll be watching out for in the next show, that is the market. At 8:35, we'll be joined by the TCS top management after the company reported a weak set of numbers. Next up, we'll have Sriram Subramaniam, who will join us to help us understand what if there are any key governance issues that Z is facing. Next up, we'll have Manish Rai Chaudhary, who's a veteran investor in Asian equities. He'll help us understand what the market setup is looking like, what to expect from earnings, and what are the tariff jitters? What do the tariff jitters mean for the Indian market? Next up, we'll have Parthiv Jonsah, who will join us to decode what the tariffs mean for the metals market. And going forward, we'll also have Ashish Soumya, who will join us to decode the entire market setup and what the earnings setup is going to look like for Q1 FY26. And on that note, let's take a short break.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to
or SIR of electoral rolls, calling it a constitutional mandate. However, the bench raised serious concerns about the timing of this exercise, questioning why it is being conducted so close to the polls. The court urged the Election Commission to consider including widely accessible documents like Aadhaar card, voter ID and ration cards for voter verification, noting that the current list of 11 documents is not exhaustive. The next hearing is scheduled for the 28th of July, with the Election Commission directed to file its response by July 21st. As Bihar gears up for elections, this ruling has sparked intense debate, with critics alleging the process could disrupt the democratic right to vote.
All right, then moving on. After staying in the ISS for over 2 weeks, Indian astronaut Shubhanshu Shukla, an Axiom 4 mission crew, is expected to return to Earth on July 14th. Next up, the Maharashtra Legislative Assembly has unanimously passed a special public security bill. The bill aims to strengthen public safety mechanisms in the state and enhance the government's ability to respond to security threats. With full support from across the party lines, the bill now moves to the Legislative Council for further consideration. Next up, at least 9 shots were reportedly fired at comedian Kapil Sharma's newly opened eatery in Canada. Khalistani terrorist Harjeet Singh Ladi has taken responsibility for the shooting, as per reports. In some somber news, a massive disaster has struck Himachal Pradesh's Mandi following a cloudburst, says Chief Minister Sukhwinder Singh Sukhu. He has confirmed that 3 assembly constituencies have been impacted, with Siraj being the worst hit. Relief efforts are underway.
And shifting focus to some global stories then, Trump is continuing his tariff spree, announcing a steep 35% tariff on Canadian imports starting August 1 and warning that it could climb if Canada strikes back. In a letter to Mark Carney, Trump also threatened blanket tariffs of 15 to 20% on most other trading partners. The move extends his aggressive trade war strategy, already hitting Japan, South Korea and copper exports. Trump made it clear not everyone would get a formal notice, saying simply that we are just going to say all remaining countries are going to pay. Global markets brace for the impact. And the number of people filing for fresh unemployment benefits in the United States declined by 5,000 to come in at 2,27,000 in the week gone by. This figure is the lowest that we have seen in the last 2 months. Initial jobless claims, in fact, fell for the 4th consecutive week. Remember that the previous week also included the US Independence Day holiday. Meanwhile, continuing claims rise to 1.97 million in the June 28 week, which is still the highest that we have seen since late 2021. And the US Federal Reserve is moving to loosen the reins on big banks, proposing a new definition of what it means to be a well-managed bank. Under the draft plan, banks with one deficient rating could still qualify, easing restrictions on activities like acquisitions. Federal Vice Chair Michelle Baumann calls it a pragmatic fix, but critics, including former Vice Chair Michelle Barr, warn it could undermine safeguards and heighten seismic risk for the company. The White House is turning up the heat on Fed Chair Jerome Powell. President Trump's budget chief Russell Watt slammed Powell for gross mismanagement of the Federal Reserve and accused him of misleading Congress over a lavish $2.5 billion headquarters renovation, nearly $700 million over its budget. The attack signals a fresh escalation in Trump's battle with Powell, which had resisted calls to slash rates. And the U.S. economy remains a good place, says St. Louis Fed President Alberto Musaliam, but warns that upgrade risk to inflation continue to remain. While calling the Fed's policy modestly restrictive, he adds that the financial conditions remain supportive of growth even as tariffs and dollar depreciation could push inflation higher. JP Morgan CEO Jamie Dimon says Europe is struggling and the global economy remains deeply challenged. While praising Trump's support for Ukraine, he added that the focus should be on strengthening Europe alongside the United States. He also warned that tariffs, immigration policies, and deficits are fueling inflation and described economic data as totally impossible to read. He also called out Europe's competitiveness woes, noted that Ireland's appeal for companies, and criticized London's weak IPO market. JP Morgan is also weighing a shake-up of its flagship emerging market bond index, potentially cutting China and India's weight to make room for smaller and higher-yielding issuers. The proposed tweak could lower the country cap from 10% to 8.5%, boosting yields but also risks for the $200 billion of funds tracking the benchmark. A similar plan last year to slash China's share was scrapped. And a federal judge has blocked Trump's order restricting birthright citizenship in the United States, using a class action loophole to sidestep a recent Supreme Court ruling that limits nationwide injunctions. The judge sided with immigrant rights groups, allowing the lawsuit to proceed on behalf of all affected children that were born in US. The ruling is on hold for a week to allow appeal. And Uniqlo's parent, Fast Retailing, is bracing for a tariff storm. The Japanese giant warned that Trump's new tariffs will also start biting its United States business later this year, forcing price hikes to offset the pain. The retailer also posted a weaker than expected third quarter profit, missing estimates but stuck to its full year guidance. Uniqlo's CFO admitted it will be tough to absorb all extra costs related to higher tariffs. And a major global outage left Microsoft Outlook users locked out of their email accounts for nearly 11 hours, disrupting access across web, desktop and mobile phones. The problem also hit millions worldwide, with login errors and severe failures flooding social media. Microsoft blamed this to a failure in its mailbox infrastructure, possibly linked to authentication glitches. An Italian confectionery giant Ferrero, famous for Nutella and Ferrero Rocher, is making a $3 billion deal in the US breakfast aisles. It is acquiring WK Kellogg, which is the maker of Fruit Loops and Frosted Flakes, to expand its North American footprint. The deal marks a 31% premium and has already sent Kellogg shares soaring. It is set to close in late 2025. And Trump is set to host Nvidia CEO Jensen Huang at the White House today as Nvidia celebrates a historic milestone of becoming the first company to close above $4 trillion market cap. The meeting's agenda remains unclear, but Nvidia has been battling Trump's tough export controls on AI chips, which have collectively shut it out of China's $50 billion market.
All right, then shifting focus to the US market. Now, tech giant Nvidia is in trade on the back of this. ET Now's Roshni explains how Nvidia got there.
Nvidia, the chip maker powering the AI revolution, has officially become the first company ever to touch a market cap of $4 trillion. But how did we get here? Let's rewind a bit. Back in August 2018, Apple made history by becoming the first company ever to touch a $1 trillion market cap. It took Apple a whopping 42 years from 1976 to 2018 to hit that number. But things accelerated fast after that. Apple reached $2 trillion in just 2 years by August 2020. Then it hit $3 trillion by January 2022. And today it stands tall at around $3.15 trillion. Microsoft joined the club in April 2019, crossed $2 trillion in June 2021, and by January 2024, it had already hit $3 trillion. As of now, it's hovering near $3.74 trillion. Saudi Aramco came in strong right after its IPO, hitting $2 trillion by December 2019, but today, its value has cooled slightly, currently around $1.61 trillion. Alphabet, Google's parent company, entered the $1 trillion club in January 2020 and now sits comfortably at around $2.15 trillion. Amazon had an interesting journey. It crossed $1 trillion briefly in September 2018, dipped below, came back up and repeated that few times. But today it's solid at about $2.36 trillion. And then there is the star of the show, that is Nvidia. It took Apple 42 years to hit $1 trillion. Nvidia just kept breaking records. $1 trillion in May 2023, $2 trillion in February 2024, $3 trillion in June 2024, and $4 trillion in July 2025. That's right, it zoomed from $1 trillion to $4 trillion in just 2 years. No company in history has done it faster. Nvidia, led by electrical engineer Jensen Huang, now has a market value greater than the GDP of France and Britain. A testament to investors' confidence that AI will spur a new era of robotics and automation. Nvidia's explosive growth is being driven by its GPUs, the powerful chips that act as the brains behind today's biggest AI breakthroughs. From ChatGPT and Gemini to cloud computing, autonomous vehicles and robotics, Nvidia powers them all. Interestingly, among all the tech giants, Saudi Aramco stands out as the only energy company on the list. With a valuation of $1.61 trillion, it's proof that oil still matters in the tech-dominated world. So these are the giants of the global economy, the exclusive members of the trillion-dollar club. And the $1 trillion list may soon expand even further. Companies like Meta, Tesla, TSMC and Broadcom are getting close, with some already touching the $1 trillion mark briefly.
So Nvidia has now crossed that $4 trillion market cap in the United States. Roshni, thanks so much for joining us with all those details. We need to slip into a very short break, but many more news and updates coming up on the other side. Stay tuned.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.
That continued global macroeconomic and geopolitical uncertainties caused demand contraction. Pulkit, my colleague from the research team, is now joining us to do all the number crunching for us. Pulkit, over to you.
Good morning, Ashesha. As you clearly explained that TCS has released their earning and the numbers are on the softer side. So if we talk about the revenue, it is around minus 1.6% down Q-on-Q basis. For EBIT part, it is again minus 0.6% down. For PAT, it is up 4.4%. But needs to be one thing need to be taken care is that it is because of the 600 crore that is received from income tax as an interest income. So that's why we are seeing this kind of surge in the profit part. If we talk about the general geographical trend in India, the YOY CC growth is around minus 21.7%, and basically it is due to the BSNL deal ramp down. For segment wise, if we see on year-on-year CC growth basis, BFSI is 1% up. But if we talk about the management commentary, the discretionary spending in the BFSI sector is seeing something on the softer side for both Europe and the America side. So all in all, the numbers are soft, and now we will see further what happens with the other IT companies as well.
All right, so a softer set of numbers coming from TCS. Thank you so much, Pulkit, for taking us through all of that. But let's also listen to what the TCS management had to say about the numbers.
We are comfortable with this number. Okay, we previously also called out that 7 to 9 billion is a comfortable number. So, but as long as it's a good number, as long as there are no scope reductions, existing projects or pauses don't happen, like then it reduces the immediate quarter revenue. But overall, we are comfortable, and the pipelines continues to be strong for the coming quarters also. So, and in fact across all geographies, which gives us a confidence that the order book and then sooner than later the revenue should follow through strongly. From a outlook perspective, we are still confident and optimistic that international revenue in FY26 would be better than our FY25 revenue. Overall, it will be too early to call out when growth will resume, which to a great extent depends on more clarity emerging in the macroeconomic scenario.
With respect to wage hikes, we have not made any decision so far on wage hikes, and we'll let you know as soon as we do that.
Exclusive interaction lined up for you with the management of TCS at 8:35 a.m. But shifting focus from the IT sector to the metal sector then, and Vedanta conducted its AGM yesterday, especially in the backdrop of all the noise that has been coming around. But management highlighted the 3D strategy to double the size going forward. They focused on 3 Ds, which is demerger, diversification and deleveraging going forward. Diversification, remember, is already underway. The company focused to diversify across several categories, and deleveraging is also on company's mind over the last few months. Now, as far as demerger is concerned, some bold statements have come in from Chairman Anil Agarwal, where he says that each of these demerged businesses has the potential to grow into a $100 billion market cap company. So that's the kind of potential he sees in all of these demerged businesses. He also says that he is in advanced stages of restructuring the business, and the demerged business will get renewed focus, new investors, edge to achieve new potential going forward. So the focus on each of these businesses will continue to remain very strong. And remember, this is likely to play out over the next few months. Now, apart from that, remember, they also focused on partnerships, that they are intending to enter into partnerships with 1,000 startups going forward. This will be the largest innovation hub. So they intend to get into partnerships with several startups, and this will be leading growth for the company going forward. Lastly, as far as the recent Viceroy report that came in, Viceroy Research, remember, is a research group based out of United States, and they made several allegations against the company, to which Chairman Anil Agarwal has clarified that this is motivated and it will be dealt with separately. So some bold statements coming in, one with respect to demerger, and the second one, the most important one, being that each of these demerged businesses have the potential to grow into $100 billion businesses going forward. So yes, Vedanta will be in focus on account of this commentary that has come in from the management in the AGM.
Okay, so those are all the key takeaways from Vedanta's AGM. But moving on, Hindustan Unilever has named Priya Nair as its next managing director and chief executive officer from August 1st, as Rohit Java steps down to pursue the next chapter in his personal and professional journey. Mansi is joining us for all the details.
Absolutely. Good morning. So basically there is a leadership change and management changes in HUL, and Rohit Java will step down as CEO and MD on 31st July 2025 to pursue the next chapter in his personal and professional journey, is what he says. He has taken over as the CEO and MD of HUL in June 2023, and now what next for HUL? HUL has announced Priya Nair as the CEO and MD to succeed Rohit Java. She will also join the HUL board subject to necessary approval. So there are formalities which are remaining, but yes, the name has come out, and that's Priya Java. Now, who is Priya Java? She is currently President, Beauty and Wellbeing, Unilever. So the segment Beauty and Wellbeing, she's the president of the same, and she did join HUL in 1995. She did held several sales and marketing roles across home care, beauty and well-being and personal care business as well. So a lot in his kitty at present also, and now another change in the leadership and adding more responsibilities to her plate is what we can say. Priya Nair's professional milestone, if we talk about the same, commerce graduate from Sydenham College she is, MBA from Symbiosis Institute of Business Management, Pune, executive education at Harvard Business School, and at the same time from 2014 to 2020 she was the executive director home care of HUL. 2022 to 24 she was executive director of beauty and personal care HUL, and following that global chief marketing officer beauty and well-being at HUL, and 2023 to present she's the president of beauty and well-being. So she has been doing it really good since 2014 to 2023, and now she is taking a new position and will be the next leadership player in HUL's leadership and management scenarios.
Thanks so much for joining us. So leadership change coming in for HUL, but shifting focus to Zee Entertainment then, and the ambitious fundraise proposal by Zee Entertainment was rejected by investors who refused to issue warrants to key shareholders entities. Sharad, my colleague, is now joining us with more details on this. Sharad, over to you.
A big blow to Zee Entertainment Enterprises as their fundraise has been blocked, and the investors have rejected the proposal to give preferential to the key shareholder at entities belonging to the promoter group. Now, looking at the numbers, 40% public investors rejected this and voted against the warrant issue, to the key stakeholder at entities. Now, the proposal which was needed 75%, but 40% went against this. Now, this fundraise plan was roughly 2,200 odd crore rupees, and most of the warrants would have gone to the Mauritius-based entities, which were somehow linked with the promoters. Interestingly, currently none of the promoters are having seat in the board, and the expectation of the rise in promoter stake post this issue was supposed to be coming in at 18%, but the current number still stands at 4% when it comes to the promoter holding of the company. He would have received 560 crore immediately, and the balance 1677 crore coming over the next 18 odd months. But this could have been the first major investment after the failed Zee and Sony merger as well. Proxy firm InGovern had actually given a voting recommendation of not allowing this fundraise, and this had come last month itself, and they had stated that given the excess dilution from the proposed warrants, there are recent challenges being faced by Zee, and shareholders would actually seek enhanced disclosure, especially from the source of funds as well. Now, this might not be in the best interest of minority shareholders, and this was stated by InGovern. But of course, the company also came out with its clarification, and that stated that the board and the management are respecting the decision taken by the remaining shareholders, and also that stated that the company is guided for a board to fortify themselves and build a war chest to see these unforeseen events, and under this guidance the company will take significant efforts, especially for the profitability levels in the digital business as well.
All right. Thank you, Sharad, for joining us with all those details. But with that, it's time to wrap this edition of Market Cafe. But before that, a quick Asia market check. Now, tracking all those Wall Street gains, most indices continue to trade in the green, except Nikkei, which has turned red, but continues to be in that flat territory, trading 0.09% lower as we speak. Other than that, from Hong Kong's Hang Seng Index, that continues to trade higher, trading 1.5% higher at that 24,390 levels as we speak. On the other hand, we have China's Shanghai Index, which is continuing to trade higher by 0.7% at those 3534 levels. Next up, we have South Korea's Kospi, which also is trading around those with 0.7% of gains coming in at that 2,892 levels. On the other hand, if we take a look at how things are shaping up for the Indian market, 138 points of cut is what we are expecting as of now. So that's how the D3 setup is looking like. But with that, we'll wrap this edition of Market Cafe. It's a goodbye from me and Ashesha. But don't go anywhere, as the market will take all the action forward.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions.